Well, hello everyone. Good morning in Europe and good evening in Australia, and welcome to Clean Seas FY22 results presentation. My name's Rob Grattan, CEO, and we also have on the line David Brown, our CFO. Well, FY22 has been an exceptional year for Clean Seas. We've made outstanding progress against our strategic plan, and our focus on growing the business and on generating efficiencies has delivered a set of financial numbers that exceeds our expectations. Our sales team have done a fantastic job to generate awareness and appreciation of this species, using surplus inventory that we were left with through the COVID pandemic and turning that into sales opportunities, new markets, new channels, and also crucially cash flow. They've done a really nice job highlighting the strong culinary opportunity, culinary flexibility, incredible quality, and Spencer Gulf provenance of our fish, and been that connection between our company and our consumers. And all of that has delivered substantial sales volume and revenue growth. We've been focusing a lot on working capital efficiency improvements and reducing our cost of production. And we're very pleased to be able to deliver that decreased cost of production despite increasing feed costs and increasing input costs across the board. And that has helped us generate positive cash flows in FY22, which was a year ahead of our expectations. Clean Seas has always been a company that's prided itself on its ESG credentials, and this year we've made further progress to enhance those credentials through things like feed development and also our Asparagopsis collaboration, which represents a very exciting step towards the future of sustainable protein production. And Clean Seas obviously has a great untapped opportunity for future global expansion, and we've now put the foundations in place to truly deliver on that. Before we move on to the financials, I'd just like to touch quickly on workplace health and safety, which really is our key priority, is keeping our team safe. And through a change in focus and an emphasis on safety, we've been able to reduce our lost time injury frequency rate to below the best practice and industry benchmark. And so keeping our team safe and our effort here is really key and important to how we think about things. But without further ado, I'll now hand over to our CFO, David Brown, who will talk more about the financials.
Thanks, Rob. In FY22, Clean Seas made substantial progress against our strategic priorities, which translated into improved financial performance and has seen the company deliver record sales volumes of 3,757 tonnes, up 19%, record revenue of $66.2 million, up 37%, and record underlying operating cash flows of $6.2 million. We maintained our focus on improving the working capital position, which saw closing frozen inventory reduced by 84% and inventory months cover reduced to the lowest levels in over 5 years. With this, production costs reduced by 19%. The improvement in underlying gross profit to $1.82 per kilo reflects improvements in pricing and production costs, and we are well positioned to achieve further improvements in gross profit in FY23 as we benefit from purely selling A-grade premium kingfish. While the overall FY22 performance was an underlying operating loss due to the historical sunk cost from the year class 20 cohort, we continue to see month-on-month improvement in profitability, and we remain on track to deliver positive operating earnings in FY23. The statutory profit of $8.7 million reflects the improvement in operating earnings coupled with the increase in valuation of biological assets due to the uplift in pricing, particularly in Q4 FY22. FY22 was a breakout year for Clean Seas in terms of sales volume and revenue. The encouraging 19% growth in total sales volume was driven by Australian and European markets. Our domestic Australian market grew sales volumes by 19% and now represent 57% of the total global sales volumes. This result represents a significant achievement and just demonstrates the growing demand for kingfish in the premium food service sector in Australia. Demand for the fresh products in Australia and globally continue to exceed supply, which improved pricing by 14% to $19.29. Our European market primarily focused on building awareness for frozen products, which resulted in approximately 819 tonnes sold directly into the European market. The transition to frozen products in Europe reflects the company's strategic decision to grow its frozen customer base, utilising our premium premium frozen technology, Sensory Fresh. This has allowed Clean Seas to offset the high air freight charges as a result of COVID-related transport disruptions, with greater utilisation of a lower cost, lower carbon frozen supply chain. During FY21 in North America, we sold 282 tonnes of clearance sales to support retail launches. Due to the strong demand in higher margin markets and channels globally, these programs did not continue in FY22, and instead our focus in North America was on high margin premium customers. FY22 sales mix remained consistent with FY21 at approximately 68% fresh and 32% frozen. The higher frozen split over the last 2 years reflects the need to clear excess frozen inventory. And having completed the sell-through of this in Q1 FY22, average frozen pricing has increased to $14.06, and in Q4 we recorded pricing of $18.45. Looking ahead to FY23, we expect sales mix to return to historical levels of 75% fresh and 25% frozen. The favourable trading conditions have continued throughout the first 2 months of Q1 FY23, with sales volumes reaching approximately 470 tonnes to date. While this is down on prior year, the prior year had an increased level of frozen clearance activity. Average sale price has continued to increase in the first 2 months of FY23 and is now at $21.68, up from the $19.68 recorded in Q4 FY22. In terms of revenue, we're tracking in line with the prior year, with the increase in price offsetting the decline in volumes. The increase in sales price has largely been passed through to farmgate, gross profit and EBITDA, and provides a very solid starting position for FY23. Having reached peak inventory in FY20, the declining trend in inventory months cover continued in FY22, declining to 12 from 16 in FY21. The improvement in working capital reflects the completion of the year class 18, 19 and 20s, which were significantly impacted by COVID-19. For context, and to clearly understand the high cost of production, it's important to understand how months in water correlate to a high production cost. For Clean Seas to achieve the lowest possible cost of production, the full harvest of the year class cohort must be completed within 29 months. This provides sufficient time for kingfish to complete the 2-year grow out from juvenile to harvest size, usually completed in March and April. This ensures that we avoid holding this year class through another winter, which adds significant cost. As you can see in the bottom left-hand graph, there has been an increasing trend in the number of grow out months from year class 18 to 20. The extended grow out months in water were directly responsible to the peak in inventory months cover of 27, which was attributable to the initial but significant impacts from the COVID-19 pandemic. The extended grow out of these year classes increased production costs to a peak of $15.29 in FY21. In August 22, we commenced the harvest of the year class 21s, and we are on track to complete the harvest in April 2023, which will be the shortest grow out period in the past 6 years of 31 months and will put downward pressure on production costs. With inventory months cover at the lowest point in 5 years, the company delivered production cost savings of 19% in FY22, despite the impact from higher costs. Similar to most companies, Clean Seas was not immune from cost pressures in FY22. However, the impact of an increasing feed price had the most material impact, given feed represents approximately 60% of our production cost base. The increase was largely driven by commodity prices and freight costs. Shortages of skilled labour also impacted operations, and with a tight labour market, we continued to have numerous open positions. Clean Seas also experienced a significant increase in fuel costs. While electricity prices were largely protected from large fluctuations, in price as the company sources its majority of its energy from a certified green power renewable energy supplier. The challenges with the labour market and increased commodity prices are expected to continue in FY23 and will slow the company's ability to return to those very low $8 cost of production. However, we are still expecting significant gains to be released in FY23. Despite an increase in cost base, we don't expect gross profit to be adversely impacted and due to the increase in price. The downward trend in indirect costs continued in FY22, reducing to $3.10 per kilo. The improvement in indirect costs represents improved operational leverage, reduction in spending across sales and marketing, and lower frozen storage costs due to the lower inventory holdings. Cash receipts reached a record $67.4 million in FY22 and represented a 50% increase on FY21. The growth in receipts were driven by the company's ability to optimise working capital and sell down frozen inventory, coupled with a 19% increase in frozen sale price, and selling the majority of the FY22 harvest as fresh, which generated higher returns and eliminated holding costs. Despite growing receipts by 50%, Clean Seas managed to keep costs under control, which translated into an operating cash flow of $6.2 million. In addition to our focus on working capital and cash flow management, the company undertook the necessary steps to ensure the company maintained its level of external funding, which included renewing our $32 million debt facility with CBA. And during FY22, Clean Seas utilised the working capital facility to fund $1.8 million in fee payments and the senior debt facility to purchase 2 vessels for $2 million. And at the end of June, the company had $12.9 million in cash and undrawn facilities of $26.6 million. Clean Seas further strengthened its balance sheet in FY22 as a result of the improved working capital position. The reduction in cash holdings from FY21 reflects the repayment of the convertible notes and short-term debt. The increase in biological assets largely reflects an increase in valuation driven by the increasing trend in sales price, while the investment in property, plant and equipment comprised the purchase of 2 vessels and maintenance assets such as grids, cages, nets, and processing plant improvements. Clean Seas has commenced FY23 in a net cash position of $5.4 million, and we believe we have sufficient funding to continue to invest in working capital and major projects, and we intend on maintaining the prudent investment decisions to ensure we have the right balance between scaling for growth, maximising shareholder return, and minimising operational risk.
Terrific. Thank you, David. A great set of numbers indeed, and really pleasing to be off to such a strong start in FY23 as well. As we've talked about a lot, we entered the last couple of years with excess frozen and live fish biomass as a result of the COVID pandemic. But as I said before, our sales team have done a fantastic job to leverage that sale of frozen inventory to build awareness and develop new markets and channels, powering the sales growth that we've seen in FY22. We've continued to see great expansion in market and channel penetration, awareness and acceptance of Yellowtail kingfish globally. We're seeing this trend all around the world, and our messaging around commercial, culinary quality, flexibility and Spencer Gulf provenance continues to resonate, particularly in terms of its environmental credentials and sustainability. We've conducted a number of very specific programs to build on opportunities for the future, particularly around retail, using a frozen product, a fresh product, and also hot smoked products to really learn about product positioning and markets and price and product formats as we look to grow the business in the future. In addition to our high-end Spencer Gulf kingfish branding at the top-end restaurants, we've developed new branding called South Australian Yellowtail, which helps us in the mid-tier food service, specialty retail, and unlocks new opportunities in things like home meal kits, and really leverages the provenance story alongside the Spencer Gulf kingfish branding. We targeted the new Japanese importers in North America, really as their supply of Japanese product into North America seems to be constrained. And we've been successful in opening doors there, as well as launching into some of the larger European sushi chains in that particular market. But importantly, we've also recaptured the high-end food service business that was Clean Sea's strength pre-pandemic. And this will remain a near-term priority in order to maintain higher returns and profitability over the next year or two. I mentioned before the commercial positioning around sustainability. Clean Seas has always been heavily focused on R&D, and indeed the founding company values were around the full life cycle production and breeding of fish. Those values stay with us today in terms of why people come and work for us, our commercial positioning, and also our investment thesis around environmental and sustainable production. We're a full life cycle breeder that employs sustainable farming practices, but crucially, the unique grow-out position of a native fish grown in its natural waters with low intervention and relatively low stocking densities contributes to the quality and sustainability story that we go to market with. As David mentioned, we utilise our best practice liquid nitrogen sensory fresh freezing technology to maintain the highest quality fish, but delivered on a low cost, low carbon supply chain. And that means that we can send sashimi grade quality fish anywhere in the world with the Spencer Gulf provenance. We continue to invest in R&D as a company, blue economy research around kingfish diet and substituting ingredients for more sustainable proteins, as well as the carbon and nitrogen capture technology in things like seaweed, which I'll talk about in a minute. And all of that shown in our Aquaculture Stewardship Council and Friends of the Sea certification. We were very excited a couple of weeks ago to announce a collaboration with CH4 on Asparagopsis. Like yellowtail kingfish, there are two species of Asparagopsis that grow in the rock pools in and around our hatchery at Arno Bay in the picture here. And this Asparagopsis has been shown to reduce the methane output of cows in beef and dairy industries by up to 90%. Of course, by harvesting Asparagopsis alongside our kingfish, we're able to capture the carbon and nitrogen impacts of farming and then use the harvested Asparagopsis to reduce the greenhouse gas emissions of cows. So a really nice circular story that in time we think will help us to increase our stocking densities, reduce our cost of production, and produce an even more sustainable fish into the future, really offsetting the nutrient and carbon outflows of our farming technology. As we look to the future, we still see incredible growth potential for our incredible species. Outside of Japan, yellowtail kingfish production continues to grow at an exceptional rate, 28% per year from 2013 to 2021. But as the graph here shows, kingfish production is still very much niche when it's compared to farm salmon. And so we believe that over the next few years, the market penetration for kingfish will continue to grow as people understand more about the quality, culinary application, and sustainability benefits of our fish. We have the farming practice to deliver this high quality product, and then the supply chain and freezing technology to deliver it anywhere in the world. And really, yellowtail kingfish and our production of yellowtail kingfish leverages mega trends around health, sustainable protein, and rising environmental awareness. We truly believe that more and more people will want to understand the environmental impacts of their consumption decisions, and our fish, grown the way that we do it, plays very well into that space. And so we now have the scale, the market reach, and the balance sheet strength to unlock the capacity that we have in our farms. In terms of where that growth might come from, you may know that Clean Seas production is pretty much centred around Australia and Europe at the moment. Half our production generally goes to Australia and about 40% goes to Europe, meaning that 90% of our production is in these two markets. But these two markets themselves represent less than 20% of the global market for yellowtail kingfish outside of Japan. And so the great untapped markets in North America and Asia, which are predominantly frozen markets as well, represent an opportunity for us in the future, in the other 80% of the addressable market. And then obviously with our provenance story and with our sensory fresh freezing technology, we have the supply chain to send fish into these markets and grow into the future. In terms of outlook for FY23, in some ways it'll be more of the same. We'll be continuing to build awareness, continue to diversify, and to continue to highlight the quality and provenance story of our yellowtail kingfish. We believe that we can increase our harvest in FY23 by up to 30% to maintain year-on-year sales volumes and replace those sales volumes, the 900 tonnes that came out of the freezer in FY22. And if we do that, obviously, as David mentioned, we will see that all at the very strong premium pricing that we've been able to deliver in the second half of last year, which will give us a good step up in terms of revenue, profitability, and also cash flow. Our optimised working capital is expected to deliver further reduction in production costs, and as a result, we're expecting to have a positive underlying EBITDA and to continue to deliver positive operating cash flows next year. In terms of what newness will bring in terms of our strategy next year, we'll be focusing more on how we unlock our future capacity. That will be appropriate levels of investment in things like automation, genetics, vaccine research, and other ways of increasing the efficiency of our farming practices. And in doing that, we expect to be able to make investment decisions that increase our scale, improve our operational leverage, while also managing financial risk. And that's critically important for us, that we continue to grow the business in a very financially viable and sustainable way, growing our profitability per kilogram, reducing our operational risk as we grow the business over the next few years. We also intend to continue development on those ESG enhancing projects around feed ingredients and carbon and nitrogen capture, because we believe these are the future, and this will be critically a point of difference for Clean Seas in the years ahead. So in summary, we have very strong sales momentum. We've been taking our outstanding premium species to the world, driven by our unique provenance story. We have a clear pathway now to profitability and demonstrable positive cash flows and ongoing decreasing production costs despite the inflationary pressures. Those attractive demand and supply drivers, strong pricing in market, and of course, very high barriers to entry with the 20 years of experience and the amount of cost and working capital that's gone into building a 4,000 tonne business with the intellectual property and the assets that we deploy. We've got great growth potential for this species, not just in our established markets of Australia and Europe, but in our untapped markets of North America and Asia, leveraging the provenance and leveraging that frozen supply chain to get product into those markets. We still have scope to reduce cost of production and increase yields through automation and selective breeding. And of course, we've got those unused farm licenses to nearly triple our production to 10,000 tonnes. We intend to retain that positive social license, stay engaged with local stakeholders, build on our positivity, and our sustainable and environmentally friendly growth opportunity accredited by the world's leading aquaculture certifiers is what we have in Clean Seas. So that concludes our presentation. Thanks to David as well. We're very happy to take any questions that might be there.